Hi traders, welcome to the Ken Tank, where you'll learn how to avoid getting eaten by the sharks on Wall Street. It's always all information for educational use only. I'm not making advice about what to buy, sell, or hold. Hello active traders, this is Ken Calhoun, President of Trade Mastery. In today's Shark Tank episode, I wanted to cover the difference between some of the very strongest charts and how to trade them and how to avoid false breakouts. One of the keys to successful breakout trading is, number one, trade the strongest currently trending charts that are likely to continue on up after you get into a trade. And the second is to make sure that you use a false breakout filter so that you don't get in right at new highs and then get stopped out when the market invariably pulls it back down as soon as you get in. So one of the things I thought might be helpful is for us to take a look at some of the differences between some of the very strongest charts out there and everything else. Now, what do you notice about this chart in SRG? Not only is the existing trend very strong, going from 46 up to 53, so it's got a nice healthy 7-point trading range on a $50-ish stock, but the fact that it had a bullish cup breakout continuation and continues to take out new highs makes it an even better play for new entries and exits. Another thing to look at is the 90-day chart. This is a 15-day swing trading chart. What I want you to look for is in the 90-day chart, whenever I'm looking for new entries, one of the very easiest patterns to look for is seeing if there's any large preponderance of whole real body green candles signifying institutional buying coming in as you're considering putting on a new trade. Now, I've spoken on this at my Money Show appearances and published on this in my Technical Analysis of Stocks and Commodities magazine articles because it works so well. It's a very good professional trader's way to look at trading your entries. So when you see a first large green candle at the right side of a bullish cup, you should start figuring out where to put on a trade here. Or if you missed the second run, okay, well, here's another green candle, you'd be looking for a trade up in this region. Or above this candle, even a third chance to get in up here. But the point is, look for these large momentum candles in a strong trending instrument. And you could have done extremely well if you traded the first or the second or the third breakout in this uptrend continuation in SRG. Another one that I like to trade, for example, is Barrick. All the gold miners have been strong. I like Barrick, and GDX is another favorite of mine because of the overwhelming price action breakout strength. From 13 to 21, it's a 7-point run. Even if you only got 4 or 5 points of it for a $10 or $20 priced ETF, that's a really good instrument. I also like Barrick, ABX, because it's nearly doubled, going from 8 to 15, right? So that's a really good pattern. One of the things to look for, though, to avoid false breakouts is to always set what I call a false breakout filter above the current high. And usually I will avoid trading within the first 50 cents or so, kind of the danger zone above a new 15-day high. I'll usually use a trigger for here. Example, I would wait till it gets over 16 to get long Barrick, ABX, right? I wouldn't be trading 15.6 or 7 because I expect it'll stall near the whole number 16 and drop. So for a swing trade, I'm going to be a little more cautious. Now, another good pattern I want you to look for, and this is one of my favorite entry patterns, is one that we're seeing right now. Kind of getting started is this pattern in which you have a small followed by a large whole real body candle. Okay, and the neat thing about these dual patterns or these dual candles is, for example, here you can see small real body, large whole real body led to a nice big uptrend continuation. We see that same exact pattern over here. And as pattern traders, whether you're a pattern day trader or a pattern swing trader, your goal is to make as much money as you can by trading successfully the repetitive patterns that are known to potentially do very well from a money-making standpoint. So I'm looking for increasing volume, which is good, right? We see an increase in volume. One of my articles I published, you look for 3 increasing volume bars with convergence, not divergence, but a converging price action breakout. Then we look to play around with it once it takes out new highs above a false breakout filter up in this region. Okay, so that's a good example of the type of underlying strength you want to put into your trades when you're looking for good breakout continuation plays. Another good chart here is HCP, the ticker HCP. And what I like about this one, not only does it have a preponderance of buyers, right? We've got a nice reasonably strong uptrend continuation, But it has what I call an acceleration ramp, and that's where you've got a steady uptrend that then all of a sudden gets excited, preferably when accompanied by large volume, as we see down here. So kind of like a hockey stick breakout. You've got a steady uptrend that then gets sharper, which means we've got new buyers coming in, and especially we've got a minor gap continuation in Friday's markets to work with as well. So for that reason, I'm looking at this one for new long. Remember though, we stay clear of the danger zone, the false breakout filter area right above the current high. So personally, I'd be waiting, and not a trade recommendation, but I'll wait to hit it till it gets over 35.50, right? I'm not going to go long till it takes out that safety buffer region of danger up here. You know, if you've been like I've made all the trading mistakes possible and then some, and I've done tens of thousands of real money trades, and one of the things I found in my own real money trading was, you know, it's a danger zone up here. So instead of trading this region, wait till it gets up here and keeps you out of a false breakout and in on the continuation run. Okay, especially good when you have an acceleration pattern like this, where you've got a steady uptrend that then gets to a sharper angle breakout. That means new buyers coming in the house, and we've got large volume as well. The neat thing is, once you start learning how to trade these kind of patterns with any of my premium courses or alerts, like www.swingscans.com or my live trading room at tradingopen.com, we're really keen on, as a team, identifying these strongest patterns to help you understand how to trade them. Again, as a real money working trader, I know the difference between what works and what doesn't, and what I found is 3 keys to successful professional trading. And by the way, gaps continue most of the time. I like gap runners, gaps that go up and continue, like the CPXX chart, right? That's a good breakout continuation play. Anyway, the 3 things I found work really well. Number 1 is play the tightest, strongest 45-degree angle breakout type charts, right? Any good professional trader will confirm to you that a story of sustainable buyers over multiple days always leads to better trading entries. We've got a bullish lower shadow here on the gap, or as also known window in candlestick talk. We've got a gap or window up that attracted new buyers to the tune of all the way from 8.5, 9, all the way running up to 14. So you've got nearly 5 points of price action on a $10 instrument. That's why this is one of the story stocks that continues on up. However, I'd be cautious because of this pullback. And as you take a look at these pullback regions, it wouldn't surprise me at all to see this thing drop down within this region, you know, to fill the 12 to 10 on a reversal down here, as well as potentially climb on up if it's able to break over the 1450. But as a professional trader, what you have to be smart enough to do is understand you avoid this congestion support resistance area 1250 to 14. That's kind of a no man's land that you don't want to trade around. You let the crowd decide who's going to win, whether it's buyers or sellers, and then you jump on with the institutional money flow, preferably an uptrend continuation. But if it does gap down and run down, or does a minor gap up and keeps going up, the volume will tell you a story of who's winning the battle between buyers and sellers. So don't let the fact that it ran up here nicely mislead you into trying to get into a new high, because it's already relatively extended. And so this is kind of a dangerous chart, in other words, to trade compared to some of the others that have a steadier uptrend, right? Like this one is such a nice 45-degree angle classic breakout, going from 42 to 52 in just a matter of a few short weeks. That's the type of chart pattern that you really want to focus your energy on as a professional trader. So as you're looking for the difference between charts that work and everything else, always keep in mind as a parting thought what the S&P is doing. You know, the broad S&P here, if you take a look at this chart, you can see right now it's in trouble a bit, doing a minor downtrend continuation. We mark out the current support resistance trading region, the recent 5-day high and low. You can see we're here right above 2030 and right under the 2080. Because the fact that this has started to decline here lately, the trend has been an immediate channel down. You want to be cautious about buying new highs, and instead wait to see, you know, do buyers come to the rescue and lift it over 2080? Or do sellers come in and pull it down here into this region with support at the major moving averages. So whichever way it heads, be ready for it. Just be smart enough to avoid trading within the congestion box, which is a much riskier place. It's likely to cause stops. Okay, so anyway, with that, I just thought I want to give you a quick heads up on the differences between the type of sensible, strong breakout charts that would have been great to trade and some of the patterns designed to help you make smarter trading decisions. Just a reminder, these large green momentum signal candles are often good places to consider buying above new highs once they occur in context of an existing uptrend, because you've got so much point potential in trading these, it really makes sense. Or if you are trading, make sure you're trading within a strong sector, like gold miners. There's Barrick, NUGT, GDX. These have all done extremely well the last couple of months. The challenge is, we see this two candle pattern. Is the buying pressure likely to continue or not? And always be cautious when it comes to entering, and make sure that you look for the very best trading setups with these types of charts and more. So anyways, I'll see you in my upcoming www.swingscans.com events on Saturdays for swing traders, or if you're a day trader, also be sure to also be part of my tradingtheopen.com live room experience. Anyway, this is Ken Calhoun wishing you the best. Get out there, make some money, do well in your trades, and I'll see y'all next time. Thanks. Bye-bye.